Paragon Elite Traders, how you doing? It's Matt Stevenson. Just coming here with a discussion about a new forex trading strategy that I've been testing out, and I like quite a bit. I call it AVWAP, but it stands for Anchored VWAP. If you don't know what VWAP stands for, it's just volume weighted average price. And what that means, alone, volume weighted average price, and no matter, so if you're trading a daily chart or an hourly chart or 15-minute chart, for that one candle, the volume weighted average price is the most relevant and significant price because the most volume exchanged, in this case the currencies, at that price. So in that given candle, the volume weighted average price is the most relevant price. But anchored volume weighted average price is great because we can look at it over a trend. And I'll get to that in a minute, but I just want to remind you that price action and volume are our two primary indicators. So that's one of the reasons why we focus so much on volume, and VWAP is actually a great way to focus on volume. But volume in general, when there's a lot of volume and volume spikes, that's the market participants that are voting which way they want this pair to go. And if suddenly there is 5 times average volume, well, that's a lot of votes, and it's going to take a lot to reverse that. So it's something we should definitely look at, and that's one of the reasons it's one of the primary indicators. The other is price action, which is the candle formation. We can learn a lot about the current market sentiment and psychology by looking at the shapes of the candles that are in the charts and at what point they are in the chart. For example, if there's a massive trend and then suddenly there's normal volume, but it's a doji candle, well, we're scared at that, right? Because that shows indecision. So these two things are our primary indicators. The rest are secondary. Oh, there we go. It appeared. So this blue line is the anchored VWAP. And what you do is you anchor it at extreme lows or extreme highs where, there's been a trend and it's obviously over, so we can anchor it there. Um, but this is anchored VWAP. And you can see it gives you these buying opportunities where it comes down and fails to break the anchored VWAP, and we'll get into why I think that didn't fail. But then, I could have drawn one from up here where this trend appears to be over, draw another anchored VWAP up here, and then it fails to go above it here. So these are good selling opportunities, good buying opportunities. Okay, so how do you get this in TradingView? I wanted to show you where it was over here in the left sidebar here. There's a little caret on every one of these. And if you go to this one, take it down to volume based, there's an anchored VWAP. I just made it one of my favorites. So I have to go in there every time. And then once you click on that, this picture will be out here, and you just press on that and you can anchor it, which I've done here. So I've got it at a low, at a downtrend here at the all-time low, put anchored VWAP, and it gives me this whitish line where, again, the price continues to test and doesn't really fail. But then you get this massive run, this Bollinger Band stretch that just isn't sustainable. I mean, I'd have to look at the Bollinger Band width and how often that's happened on this pair. But so I place another anchored VWAP up here, and then look, sure enough, it gives you 2 more opportunities to sell again as it fails to break through. All right, another thing we can do. So we've got the primary anchored VWAP here, this line, but as it goes up and then it retraces, tests the line, and then goes up again, we can set another, what I call a band or another handoff, and anchor another VWAP line there. So what it'll do is going forward now, it's got a different, it doesn't take into account this. It's just going forward with the volume weighted average price during this time period. And it gives us, because these buying opportunities didn't make it down to the lower one. This one did, but it's actually an inside bar, so it's actually a quality trade setup. But it creates legging in opportunities, is what I found. And obviously, we'd place another anchored VWAP up here if we were looking at it after the fact. But and up here, we probably would have placed one. So realized you can't really see, but up here, oh, okay, we switched screens on me here. All right, so you can see the difference between the standard and the standard, which is the blue VWAP line, and then the Anchored VWAP line, and you can see which one actually is relevant to a trader. And I've told you why. Standard VWAP just takes, in this case, a day's volume weighted average price, and that's all it gives you. So market shifts is where you want to anchor the VWAP, and I mentioned that. So extreme. So I mean, could have been down here, but up here's definitely one. But it's still going down, and it keeps giving you these opportunities to leg in as it comes up and fails, comes up and fails. So once again, it's just a way to see where the volume is buying and selling these pairs, and that matters because they are the market mover. They're Mr. Market. We have to go by their rules. So that's why this line is important. So on down days, big players sell when the price goes above the line. That's why sometimes you'll see it break above and below, but don't be alarmed. And I'll get to the Fibonacci retracement about that. But that's how the big players are able to not influence the price as much as they probably could. When they want to buy or sell a massive chunk of a pair, they don't do it all at once. That would be stupid. That would drive the price way down or way up. So if they have a big chunk they want to buy, they'll wait for sell-offs and they'll pick up some there, and vice versa. So, and this is the great thing about this, you can apply it wherever and whenever you want, and from then on, it gives you valuable information. It is above VWAP, above moving averages. This is the most valuable charting trending tool I've found. I've always loved volume-based indicators, but I don't even know if I want an exponential 50 moving average anymore, because this one seems like it's giving me more information and it's working way more often than the 50 is for me. And they're, right here, for example, I keep saying it's got to come above the 50 and then past the prior swing high. Well, yeah, that would have given me a great trade up to there, but then we're back down. So, but look at this. I mean, look at that run. But then you could put another anchored volume here, anchored VWAP here, and see where you go from there. But I would value it above any moving average and the VWAP line itself. Major turning points or events on the charts are perfect spots, like I said, and we can see why. Okay, so we can see, yeah. So this is why major players will watch it dip below this line if they need more of it. They're not going to just buy it all at once and send it sky high. And this is why. See, it dips below the line. The big players are waiting for it to, sell off before they pick up more. So, but it's staying consistently over it. Then it gets a little out of control here. And we could probably do another one here. And like I said, wherever you anchor it from that moment forward is where it's going to be valuable. A valuable tool to judge where you should put your stop loss, if you should leg in, if you should be, concerned about bailing on the trade. I don't know who would trade this and then possibly leg in there, but who would hold it past this thing? In my entries, exits, and re-entries video, I say I definitely would be out at that point because I'm pretty sure the Bollinger Bands are a mile wide at that point. So I'm not one of the ones that would have held this, but would have been a bad move. Look at that thing. So you can do bands and just adjust your inputs, but it's really just a stress test to see, okay, how far is this thing going? These are like standard deviations. So here's the median. This is 1, 2, 3, 1, 2, 3. So getting up here, it can be really, at the 2 standard deviation, that you got to think in your mind, it's gone probably as far as it's going to go. But so trades like this, holding out for that 2 standard deviation move is a little risky, and it makes especially newer traders nervous. Excuse me. But those bands also show us, just like in the Bollinger Band, videos that I talk about, they show us good mean reversion trades. Now, those are also scary for newer traders as well, but they show that currencies are a mean reverting asset. So when you get to these 1, 2, 3, that's 3 bands out. That's 0.2% of the currencies. So the chances of it reverting back to the mean is very high. So you want to make sure you get that confirmation of it reverting, but those can be very good trades. Yep, and it talks about more mean reversion, risky for beginners. Okay, so it's like I said, you can set it anywhere where there's extreme price action, extreme trend, and then everything after the anchored VWAP shows us some good information on where we are with respect to where the price should be. Now we go down here and we get another low, and we can place that there, and now suddenly it's not going below it. It can go below it up there. So you can do it both ways. Got this. Okay, so I pulled up the pound Aussie chart today, just a random chart, and I saw some things that I liked here for this video in particular. We've got some extreme highs and lows, and this is the hourly chart. So I anchored the VWAP up here, and you can see the line go down, but you can see a lot of legging in opportunities as the price comes up, fails, goes back down, comes up, fails, goes back down, comes up, fails, goes back way down. But then I see it hit this, extreme low, and I anchor it there. And now we're on a bullish anchored VWAP line, and I can't really see what's going on here, but I think it's going like this, and it's kind of giving us information on where the big guys are letting it sell through the line, picking more up. Look at the volume spikes as it goes through, and then we have a nice run again, and then we get back up to almost exactly where we were before. I anchor it again, goes down, comes up, another selling opportunity, another selling opportunity, and so forth. Look at the size of these moves. 312 pips in a pound cross. That's a massive move. 334 pips, also a massive move. So this can be an extremely profitable strategy, and we can go over it during our coaching sessions, but further. But I have loved this recently. It's been extremely helpful for me. Now, most of you know I'm not a big user of Fibonacci, but in this case I am, because as I said, the big players, after you anchor that VWAP line, they wait until it's a little oversold. Oversold means it's not gonna stay above the A VWAP line. So what I do is I draw the Fibonacci, and then this is that 0.38 retracement, and you can see that that's where it stopped going down and then kept running up. Sometimes it'll go to the 0.5. I don't ever let it go that far. 0.38, I would let it go to that point. That's always been where I draw the line. 0.5, I mean, I just gave back half my gain. Why would I do that? 0.38 still has, another chance of getting out. Now, the only reason I'm saying all this is the AVWAP line to me is very, very useful, and it's been very good to me. In the entries, exits, and re-entries video, I talk about how the Bollinger Bands are most likely stretched out, and it starts retracing. These are massive bearish candles, and I talk about how I just get out, and then I can always get back in if it comes back up and crosses. But in the Anchored VWAP line, you miss a potential area of legging back in, even though it did retrace and it could keep going through. So do what you like. A gain is a gain. I mean, if you want to get out here and leave it until it proves that it's going to keep going, that's also something you can do. I'm just showing you why the price goes below the AVWAP. It's because the big players, when they want to grab a bunch of it, they like it when it gets oversold. And when things get oversold, it usually takes them below moving averages or an AVWAP line in this case. All right, guys, if you have any questions, let me know. Feel free to start practicing this, and let's practice it together during coaching sessions, but I think you're going to like this. Let me know if you have any questions. Trade well, my friends. Bye-bye.